Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 28th, 2025. I am Nova.
I am Satoshi.
Okay, let's kick things off with market performance. Generally positive over the last day or so. Major cryptos edged higher. Bitcoin, pretty steady around $119,000, up about 1%. But Ethereum, it actually outperformed quite a bit, a 3.5% jump to $3,932.
So that seems largely buoyed by institutional optimism.
Exactly. Yeah, that's the feeling. We also saw, other large caps doing well. BNB surged over 6%.
Wow.
Solana climbed around 3%. And even meme coins. Some modest gains there. WIF spiked over 6%.
Yeah, WIF saw a nice little jump. But what's really fascinating here is the overall sentiment. It feels, cautiously optimistic.
Cautiously optimistic. How so?
Well, we're seeing bullishness, definitely, but it's not like euphoria. You see moderate funding rates, ongoing hedging. But the real insight, I think, is that growing institutional interest.
Yeah.
The ETF inflows have been robust, and that's probably sustaining things. Suggests a more mature market phase, maybe.
Okay, that makes sense. But the crypto market doesn't exist in a vacuum, right?
Not at all.
So how are these broader macroeconomic developments playing into investor sentiment? Okay, let's unpack this.
Yeah, that's crucial. The Fed rate cut debate, it's really heating up again, especially ahead of this week's Federal Reserve meeting.
Right.
You've got some officials, like Governor Christopher Waller, arguing for maybe a 25 basis point cut this fall. They're pointing to cooling inflation, growth risk.
And everyone agrees.
No, others are more cautious. And, there's even been some pressure reported from the Trump administration for earlier easing. So lots of debate there.
And you can see the impact already. Traders' odds for a September rate cut.
Yeah.
They've slipped, haven't they?
Yeah, significantly. From over 60% down to, basically 50-50 now.
A coin toss. And meanwhile, the 10-year Treasury yield, it spiked.
Yeah, to year highs, over 4.3%.
Yeah.
That's bolstering the dollar, which put a slight damper on Bitcoin's rebound.
Okay, and zooming out a bit, there are liquidity concerns. Heavy Treasury issuance.
That's right. Markets are bracing for a record $348 billion quarterly refinancing plan. That means the U.S. government needs to borrow a lot of money.
Which could soak up cash from the system.
Exactly. Could soak up liquidity. We've got some key catalysts coming up fast. The Fed decision on July 30th, Treasury auction schedule on the 31st, and then July non-farm payrolls on August 1st. If that government borrowing exceeds expectations, you could see yields and the dollar push even higher.
Yeah.
And that might siphon liquidity, potentially causing outflows from, say, Bitcoin funds and ETFs.
Wow. Okay. A lot to watch there. And as if that wasn't enough, there's also this tariff deadline looming, August 1st.
Yeah, another risk factor. If talks fail, the U.S. is set to impose steep tariffs, like 15% to 35% on a lot of imports.
And tariffs mean higher prices.
Exactly. It acts like a kind of quasi-inflationary shock. Could force the Fed to keep rates higher for longer, which usually dampens risk appetite, especially for high beta assets like crypto.
Right. We've seen similar trade tensions hurt crypto prices before, haven't we?
We have, yeah. It's definitely something to keep an eye on.
Okay, so those are the macro wins. But shifting gears, some really significant things are happening within the crypto space itself. Here's where it gets really interesting. What's jumping out of you?
Well, maybe the most telling event was that huge whale sell-off. 80,000 BTC, roughly $9 billion.
$9 billion, wow.
Yeah, one of the largest on record by an early HO dealer, apparently assisted by Galaxy Digital. It caused a bit of a jolt. Bitcoin briefly dipped below $115,000. It signals maybe a peak whaling season, veteran holders taking massive profits. But here's the really interesting part.
Go on.
The market absorbed that $9 billion sale with only a brief dip.
That's incredible resilience.
It really is. It signals, I think, remarkable institutional depth and maybe Bitcoin's growing maturity as an asset class.
Okay. And speaking of institutional depth, BlackRock's Ethereum ETF, that's making waves too.
Huge waves. It just surpassed $10 billion in assets, 15 consecutive days of net inflows.
15 days straight.
Yeah, and the pace is actually faster than their own Bitcoin trust achieved early on. It's a really powerful bullish signal for that surging institutional appetite, mainstream capital flowing in. Shows where the big money is looking.
Very interesting. And then there's MicroStrategy, or Strategy as they're now known. They've unveiled something new.
Yeah, this new high-yield Bitcoin-backed product called Stretch, ticker STRC.
High yield. How does it work?
It features these unconventional variable monthly dividends, so the payouts could fluctuate, presumably based on market conditions or performance, and they plan to expand issuance up to $2 billion, leveraging those massive Bitcoin reserves they have over 500,000 BTC now.
Wow, so connecting this to the bigger picture.
Well, MicroStrategy's stretch, it showcases a pretty novel use of Bitcoin, right, as loan collateral, as an interest generator, trying to attract that yield-seeking capital.
But it adds risk too, presumably.
Oh, definitely. It significantly increases Strategy's leverage and their exposure to Bitcoin price swings. It's essentially a hyper-concentrated bet on Bitcoin's sustained stability. So for you, the listener, it really underscores that heightened risk when a company ties its balance sheet so directly to such a volatile asset.
Right. So let's try to bring it all together then. It feels like the crypto market is navigating this mix, encouraging developments like the ETFs, these new products, but also these persistent macroeconomic headwinds we talked about. Policy uncertainty, liquidity tightening.
Yeah, it really calls for a guarded stance, I think. While that institutional adoption seems to keep the structural uptrend sort of intact, sudden swings are definitely possible. Policy uncertainty, dollar strength, bond yields, potential liquidity issues, all big factors. And this raises an important question now. How quickly is crypto really integrating into mainstream finance? You're seeing some financial columnists starting to warn about maybe excessive crypto leverage, new linkages forming, stuff that could potentially, catalyze a crisis in a downturn.
So the advice is stay alert.
Stay alert, yeah. Avoid over-leveraging, definitely. And keep a close eye on those macro indicators we discussed.
Right. So despite the short-term volatility, it sounds like the maturity and integration of digital assets that continues.
It does seem to be accelerating, yes.
Yeah.
So maybe as we wrap up, here's a final thought to consider. How will this increasing fusion of, let's say, traditional corporate finance with crypto asset management, how will that fundamentally reshape global financial systems? And what unexpected risks or maybe opportunities might emerge from this really deep integration?
Something to definitely think about. Thanks for tuning in to The Deep Dive. Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.